every year about this time, we start looking ahead towards the next year. We dug into several charts, graph trends, and housing forecasts this week, and we're a little early this year with our housing forecast show. Why is that? I'll let you know. Yeah, it's only October and we're already talking about next year. What gives, Hills? Well, quite honestly, I think we're all done with 2023, or we would like to be at least already. So yeah, a little early this year, but for good reason. I mean, right, guys? So the National MBA Conference was last week, and we reviewed a few of their presentations and housing market forecasts. NAR, Zillow, and many others are also starting to come out with theirs this week as well. Now, sure, nobody knows for sure. These forecasts can certainly be wrong or off, but there seems to be one common thread between all of them. Let's dig in. Starting with the MBA chief economist Mike Frantantoni's thoughts. He begins with some good news. Total mortgage origination volume is expected to increase to $1.95 trillion in 2024. Guys, that is up from $1.64 trillion that expected to close this year in 2023. And purchase originations are forecast to increase 11% in 2024, so that is good news. By loan count, total mortgage origination volume is also expected to increase by 19% to 5.2 million units in 2024, and that's up from only 4.4 million units that the industry is expected to close in 2023. So hopefully we're at the bottom of the pain trough, trending up. Almost all the forecasts agree that a recession is imminent. I don't think that's a big shocker there. So let's move on. Interesting statement from the chief economist, though, and pay attention to the last sentence here. Both fiscal and monetary policies have contributed to the much higher level of mortgage rates in 2023. The Fed's hiking cycle is likely nearing an end, but while Fed officials have indicated that additional rate hikes may not be needed, rate cuts may not come as soon or proceed as rapidly as previously expected. Lower rates should help boost both home buyer demand and increase the inventory of existing homes, thereby supporting purchase origination volume in 2024. The job market will likely slow as we enter 2024 with fewer jobs added and the unemployment rate increasing from its current rate of 3.8% to 5% by the end of 2024. Inflation will gradually decline toward the Fed's 2% target rate by the middle of 2025. You heard that right, not hitting the Fed target of 2% inflation until the middle of 2025, not 2024. Whew. Another interesting statement was this, and keep this in mind, this was made last week, guys, in October of 2023, after an entire year of layoffs and people leaving the industry, realtors and lenders alike. Excess capacity continues to be a challenge for mortgage lenders with low productivity levels and high expenses per loan. Lenders have reduced their headcounts and gross expenses, but the record low volume is a primary driver of these escalating per loan costs. Excess capacity? Still? Team, that's just a fancy way to say that lenders are still overstaffed, and he believes layoffs and reductions should continue. Insert shocked emoji eyes here. What about rates? Well, Frantantoni did point to lower rates, but not till the end of 2024, projecting us to be around 6% by the end of 2024. Oddly enough, the MBA seems to agree with their earlier call this year, stating that we should be about 2/3 of the way through this by the end of this year. We brought the possibility up that we were only 1/3 of the way through this earlier this year and got a ton of crazy eyes emojis in response. Looks like we weren't too crazy after all. Joel Kahn spoke as well and shared this graph forecasting housing starts and sales to increase, but still falling short of demand, which will help buoy home prices through the coming recession. Speaking of housing shortage, let's cruise over to our next source and forecast. This one is interesting because it's a 5-year lookout and forecast. Listen to this one. The National Association of Home Builders predict the national housing shortage will last through the end of the 2020s. Due to the estimated pent-up demand for housing, which ranges from 1.5 million to nearly 3.8 million homes. It will take time for the nation's builders to find suitable land, skilled labor, and materials to create a much-needed supply. You heard that right, guys. Shortages to continue to the end of the 2020s. Remember us saying the housing market moving forward is going to look much, much different than the past 15-year run? Seems like many others are starting to agree with us. Some quick hitters as we leave from each year. 2024 is expected to bring some more stability to the housing market after a few years of uncertainty, so that's good. 2025, the housing market is expected to start picking up again with home prices rising approximately 1% to 2% above the current inflation rate. 2026, the housing market is expected to continue its upward trend with home prices rising at a moderate pace. Pent-up demand for housing is expected to be supplied between 2025 and 2030, according to the National Association of Home Builders. However, the changing demographics by 2030 will result in lower demand for new housing, which could lead to a slowdown in construction activity. 2027, that seems so far away. Predicting the housing market for 2027 is a challenging task as it depends on various factors such as economic growth, interest rates, population growth, and government policies. However, based on the current trends and projection, it is possible to make some predictions. One potential trend that could affect the housing market in 2027 is the continued urbanization of populations. They go deep into this and how this could push people to the cities, but I actually disagree with this one and believe the opposite to be true and a growing trend. You guys can dig in deep and make your own decision on that one though. Deep dive today, team, with several sources. This is one to play at your team meetings and strategize around it. Share it, and we will, of course, put all the sources in the comments section below. Keep in mind, team, these are merely forecasts, and they're not written in stone. Black swan events and many other variables can change things quickly. 2023 proved that to us many times. Hope you appreciate all the hard work. If you do, please don't keep it to yourself. Share it on social and with your friends and your family and your coworkers, and we'll see you guys next week.